Morning, everybody. Hope you guys are doing well. I sent out the daily bias in the chat if you want to review that really quickly. So still looking for buy side on the higher time frames. Go to the daily chart. We have the context of an internal range gap here to external range. Now this is our first swing high, but then this would be our secondary swing high point that I'm looking for. If you look at the hourly chart, still holding bullish PD range quite well. Fib projection that kind of lines up with this buy side over here. And then if we could get a retracement down to this IRL, even down to the order block again, I'm going to be watching that. And then expansion back up into the buy side. Obviously, we're favoring bullish price action, especially if you can close above this previous week high. Good thing to mention is that you should switch your contracts. So if you're still using the current contract from September, that's going to be expiring, I think, by the end of this week. And the volume currently on December contract has more volume than the September. So if you didn't already, make sure you're switching all of your contracts to the Z 2024 expiration. And this can be done easily by just typing in NQ, dropping down the button, and then starring the little Z instead of the U. And you should do this as well with your watch list if you tend to cycle back and forth in the mornings. That's going to be important, and to make sure all the other charts are also lining up with NQZ instead of NQU. Obviously, if you use the continuous contract, it won't be as big of a deal. But if you like to use the regular contract, then something to look out for. So we did have 8:30 news today. So I'm going to be watching to see how we want to react to that. And then obviously the time dynamics as well. And get SMT at the lows would be nice too. We have short, no we don't. And we obviously had the major SMT from yesterday, failing to sweep basically all of Friday's lows. Like coming in here, even purging a little low from Thursday. So that was nice, but not really anything clean yesterday. I marked it up as a beta model, if you're familiar with the different profiles for the morning. Now, sometimes on contract expiration week, you can get some more volume imbalances, a little bit more choppy price action. I'm not super concerned with it. Obviously, I'm going to be watching just the rest of the price action. Here is your first presentation gap. If it wants to fill, actually, it already did. And then your data lows would be right here, but this is our sell side from the morning session. Now, if you look at the 15-minute chart, our profile that we potentially be looking for, since this is midnight open, we don't have any manipulation below midnight, no manipulation below midnight during London either. Basically looking for a New York Judas profile and then reversal back up to the buy side. So if you can come back down, fill this internal range gap in short-term discount, and then continue all the way back up into potentially lunch or PM session, then that's preferred. Now, obviously, if we reach further down, if we start closing below this IRL, and then we start attacking London low, then we have a bunch of stacked sell-side liquidity pools here that would have my potential interest for the morning. But as of right now, as long as we don't have, I want to see bullish SMT, things like that. Yeah, we did sweep previous week high, which is important. Potentially have a short-term breaker in here too. And you get 2 to negative 2.5 lines up with about London low if you want to use that. But I'm gonna wait for 15 minutes, I think. So watch how we react to this range in here. It'd be a short-term breaker. If we were bearish, we're not bearish though. Or at least I'm not. I mean, whilst yeah, you could trade, I guess, into this IRL. I'd prefer to get the secondary move. Do some relative lows down here too, and in here. Notice the original consolidation on top of the hourly gap. This is the 5-minute chart. So we're filling this inefficiency here. And this entire range would be the breaker technically. If you're looking at shorting. Mirror trade into this 5-minute inefficiency here. 15-minute chart, same thing. But how we close with this 15 is going to be important. We're sweeping buy side there, and we get a closure below 815. That'd be a CISD too. And if we get SMT at the highs, which I don't think we do, maybe on the higher time frame, let me double check. Daily. Not really. We didn't sweep these highs yet. Something to consider. Now, when we're bullish for the morning, you technically have 2 trade opportunities that are somewhat higher quality, or at least you would look to potentially frame a setup on. For a bullish, you're looking for an open low high close during that morning session. Well, then technically you want to be capturing this large expansion, right? Because that's going to be the easiest one, especially if your draw on liquidity is correct. Well, you also have the open to manipulation that you can be trading. Now, normally what you'll get in this kind of range in here is on a lower time frame, you're going to have something like this, a very tiny manipulation that you can project lower into where that last fib is going to be. And then you have the large expansion. So you can manipulate, you can fib project this. It'll give you your kind of reversal signature on the higher time frame. And then obviously you can be fib projecting this range, and then you'll get your higher time frame swing point, which obviously this is the larger range. That's why you want to normally be capturing that larger range. But if the opportunity is clear enough, you also could scalp down into that, I guess, counter trend leg. So watch as we dig into this 15-minute imbalance here. Go back to the 5. So we did take out some internal range sell side there. No SMT yet, at least on ES and YM. Sorry, ES and NQ if I pull up YM quickly. Here we have some SMT forming. It's not really session based. But for now, it's really the only one. We don't really have SMT at the highs. 930 here, purged the high there. Somebody looking at potentially YM SMT. Screenshot this quickly. We do have a low probability 1 hour order block here. Right in this. We don't have any high, there's no gap next to it, so it's low quality. You go to 15, there might be one. Yeah, I mean, you have this entire range, which should serve as an order block. Then you have a fair value up here. There's no volume imbalance I see. I mean, other than maybe this. So I guess that would be your order block. On the 15, if you want to use this gap. Obviously, candle bodies, we're going to see how we hold this. And this would be a CISD, but anyways, just look how this 15-minute candle prints. It's going to be important. Normally, that first 15-minute candle is going to be important for the rest of the session. That's why I preferably wait on non-news day for that first 15, because first 15 to 30 minutes is where you have your New York Judah swing. So if you want to get the larger move, then you want to be outside of the Judah swing time. So you can see we're kind of holding this breaker in here. If you extend that out, candle buys are holding below 50%. But notice how long it's kind of taking. We're still just tapping into this breaker. And it's not really expanding away. Until we see the secondary displacement. That would qualify this as a true breaker in my mind. So whenever you have like a specific premium or discount array that you want to see hold, you want to see displacement out of it. So this is going to be useful for tape reading in the future, is if you're looking for, okay, I need this gap to hold, or I need this order block to hold. Holding does not just mean candle closure. It should mean candle closure relative to that PD array plus secondary displacement. So we displaced once here away from that short-term high. We came back up into this gap. We came back up into the breaker. Did we displace a secondary time? No. So that to me is just kind of, it's lethargic, or potentially we're going to reverse back up into, you know, further premium arrays or discount arrays, or to higher time frame targets. No, us having or at least me having a bullish bias. This is exactly what I would want to see, especially with the SMT at the lows. FYM can start pumping up there. DXY is settling off, which doesn't matter too much normally. Obviously, we do have some relative equal lows down here. Actually, right in here. And obviously in here too. But notice there's no inefficiencies in this range. We got this tiny inversion gap. SMT at the lows with YM. So if you look between these lows, the 715 lows, and this. Yeah. Not the best. And it's not session liquidity either. So you got to take it with a grain of salt for sure. And we're still kind of stuck in this range. So don't get caught up too much on the 1 minute. If you look at the 5 minute, we're still very much inside this range. We've not had a single fair value gap since 9 o'clock. As your one gap. So a lot of times when you're on lower time frames, if you don't know exactly what you're looking for, you get caught up in the consolidation. You think every little tiny fluctuation is a move, or it's going to break out of the consolidation. It's not. I would say if you're new to trading, or if you're new to reading consolidation, which sometimes you can't really predict it in the beginning, go to the 3 minute, go to the 5 minute, look at the order flow there. Like 5 minute order flow is king when it comes to looking at intra-session drawn liquidity. So there's your first 15-minute candle. I mean, kind of swept buy side and dug into this gap, but I trust the gap more. So fill the inefficiency with the SMT at the lows. I want to see YM as well, or sorry, ES as well, to start taking out their highs. possible. I'm going to add an alert actually to the higher time frame. There. And CES is extremely more bullish. You also have higher time frame SMT with all-time highs on YM. Still kind of lethargic in here. There's not really a lot of gaps. We have this inversion gap so far, but that's it. Obviously, we are digging further into this first presentation. Actually, this is supposed to be extended down to here. So this is looking good for the short term, but still no bissies. So I'm going to wait for macro time, but if we have no displacement, then I'm going to sit out. I'm kind of all over the place on the 15-minute chart too. Now the candle did close above the mean threshold of this order block here. Like I said, low quality order block. This is the one that's going to hold price up more. Tiny volume imbalance there with the open. So we're going to probably trade back up into this. Now the 5-minute order flow is still bearish, which is, if you look at the most recent leg, we got this 5-minute order block we're trading back into, as well as the wick is inefficient, right? Now if we start to leave this premium array with secondary displacement, and we form a gap in here, then I would start to be looking at, okay, is there a reason why we would go short in here, even just targeting that higher time frame bisi, the 1 hour IRL in here, going from external range, previous week high, down to internal range, which, I mean, this is quite large. So I imagine if we can get back up into fair value gap, even could just scalp that as a shorting opportunity down into the IRL, but may not have the opportunity, may just run, which you got to get comfortable with this kind of stuff too. When price just leaves, there's no entry opportunity. There's no setup, there's no entry. So in here, I mean, we do have a 5-minute. If we confirm this is a 5-minute gap, then you have a 5-minute order block. You can cycle the time frames really quickly. I mean, it's not, this entire range is technically an up closing candle range. Also, basically mitigation block. Just have the new week opening gap there. Potential SMT with ES now, that's true. I don't like the fact that we're taking out this swing low though. Rebalances inefficiency and a short-term low there. It's technically an intermediate term low. But yeah, if we have the SMT on it, so now we have a short-term dealing range here. So obviously this is one large imbalance basically. From here to here. It's all just inefficient. So within macro time, if you can trade back on a premium, start holding that wick, then I would consider it. But it's just kind of funky price action to me. I mean, it's not too bad, but bit of a reason. I need a reason to flip bias. There's no SMT at the highs, which is somewhat concerning. I mean, the order flow, at least on the 15-minute chart, we're starting to get some bearish order flow, especially if we don't turtle sweep this low. Like if we don't sweep this and start closing back above, then yeah, we're going to sell off probably into this gap and into London low. There's your IRL. No really quality entry, I think, from this gap. I would like to see this. Now, the reason I didn't look at this as a shorting opportunity because still a bullish bias at this point. So we're not going to look at bearish PD raises, shorting opportunities if the higher time frame is bullish. Now, this is, I would guess, somewhat expected, right? Drop down into the IRL and kind of layer it if you want to. I need to see how we react to this. It'd be a little weird because we have a macro reversal profile instead of macro continuation. It is what it is. Now there's no SMT at the lows. Unless you use this gap, but so now we have 5-minute inefficiency here, as well as the 5-minute order block. Nice, fatal. Good work. So now this entire gap is really in premium. I'm going to be watching that 5-minute inefficiency with the 5-minute order block. Tiny order block there. Now I'd be fine with this being disrespected because it is in a discount. So even if we're bullish, obviously we'll climb through that. If we're bearish, this is a discount array. You want to seek premium. So you'd expect potentially a closure past it or even a wick past it. Fill this gap and then we can sell off. Which that's really the only shorting opportunity I would look for. Is we can trace back into premium during macro time. I don't think we have 10 a.m. news, right? Let me just double check. Yeah, nope. It's no bisis in this range either. I mean, we did react nicely off the IRL. Candle closure above it. Same thing with the 5-minute chart. Swept out the original consolidation here. And we're in a short-term discount of the dealing range. So internal to potential external. Yeah, we have gap SMT, which I don't really like to use too often, but I mean, so far the bias is playing through, trading it into premium here. But I would rather go long in this scenario. Somebody looking to see if there's any long opportunities, especially if you can form a gap in here or something. I'll screenshot this quickly. Yeah, if you're looking at this gap, which, I mean, yeah, you do have SMT here. It's not the best. Let's see why I'm still selling off there. Let me take a look at ES. I mean, still kind of messy over here too. A lot of consolidation. Now we may have a bisi here. Let me mark out actually the 5-minute IRL. It's more important to me. Do a tiny short-term bisi there. How far is this range? 38 points or so. So for value up there, mark out the sibi. So M5 sibi. Really low quality order block there. I mean, order flow obviously is bearish. I just don't really like scalping bearish down into the IRL that's already been filled. Did fill this gap though within macro time, 10 a.m. retracement. Not really a clean CISD, but we have one there. And obviously we're just kind of wicking into this gap, into this larger 1-minute inefficiency as well. But I mean, profile-wise, basically exactly what I was looking for on the higher time frame was a dip into discount and the IRL New York reversal continuation profile. So taking out sell side liquidity, SMT, not the best, but I mean, you do have kind of some SMT down here. with this low and the ES low here. If you want to count that. Not really the best displacement afterwards, but I mean, you do have a 1 minute inefficiency with a really tiny CISD breaker there, so we wouldn't have to drop into short-term discount. So if we can climb and close through this, that'd be nice. Maybe reach up for AM session high. And then we obviously have the buy side all the way up there. Which I don't think we have any short-term lows past that. See, the only problem is then when you switch contracts, there's not a whole lot of data over here that you can really utilize. Anyways, I mean, short-term high would be this. If you can reach up in here, it'd be nice. Screenshot this really quickly. Fair projection on this. And negative 2.5. I would just rely on time for the most part. Swing low, 954. Potentially swing high in the time aspect. I want to see how we react to this. Clump in here is all technically one order block. If you look at higher time frames, this would be mitigation. But it's just an order block. Also filled this inefficiency. So like this order block here would be the strongest point of it. Up closing candle for displacement down, inefficiency. And we filled a gap. Obviously, I'd prefer if it just displaced all the way through there. And so far, we're holding this in 5-minute gap is holding an inversion. And then if we get a closure, obviously above here, it'd be a 5-minute CISD. And I would need to see this swing high really broken for this swing low to be. I mean, technically, this is actually a long-term low on the 1-minute time frame. Not really fun to say, but higher time frame PD array, short-term low to the left of it, short-term low to the right of it. Obviously, if we form another swing low here, then actually, so this would be an intermediate term, sorry, intermediate term low. This would also be an intermediate term low if we can form a short-term low to the right of it. Filled a gap, short-term low. High quality. So look, I'm looking at this candle range here. This would be normally this would be a high probability bearish PD array. So if we were to break above that, I would see no reason why we wouldn't expand up to the 931 swing high. Unless you got the buy side, which is decently far. Mm-hmm. 5-minute sibi disrespect if we close above it in the next minute. If we revisit as 5-minute sibi for inversion and with the order block below it on the 1 minute. Exactly. Yeah, it'd be nice. 10 a.m. 1 minute candle is a bullish order block now. I would assume so. Technically be a propulsion block. We tapped into a down closing candle in here. Now, it wasn't a high quality order block, but technically this would be a propulsion block since we reached into it. And we left it again. So inefficiency there, high. This should be a high probability order block. Really, really one of the strongest ones, propulsion block. They're expected to either be not touched or they shouldn't be. Propulsion blocks are basically the breakaway gaps of order blocks. So you want to see either not touched, or if we do touch it, it should not disrespect. It shouldn't even wick past 50%. So you could either take wick to wick. Since we have a larger candle body in here, I would feel comfortable taking the candle body. You know, you split this in half. Okay, we shouldn't see a wick below mean threshold right in here. So preferably we stay in the upper portion. Since we have an inefficiency here, that's also nice for that kind of delivery. So what would I expect for the next couple 10 minutes, 20 minutes? We do have these inefficiencies. We kind of wick back and forth with them, but not a whole lot. So if you want to come back in and fill it, maybe tap the 5-minute sibi. Same thing in here, kind of work back up, trade back up into this, continue to expand. Now we're still whole. I mean, I told you to watch this order, these order blocks in here, right? Candles are still below. I want you to notice the 5-minute. We did just barely close above this down closing candle. And obviously, the higher time frame looks a bit better now. Holding this gap, looking for internal to external. Yeah, so if you think about it, like every PD rate kind of has its own stronger ones and weaker ones. So propulsion blocks and breakaway gaps in my mind sit basically in the same kind of category, if that makes sense. I'm sure there's probably ones for breakers and things too, but there's ES actually sweeping their daily high. So we do have daily SMT now. I would find it unreasonable if we don't take out that swing high though, at a minimum. But I mean, this high is technically purged on ES, so we got to be careful as we expand past the short-term high at 931. How do we continue to trade? Obviously, if we wick it and then start trading back lower, you have 1-minute CISD, then potentially we're going to return down into the range. But since, I mean, for the most part, we're bullish on all assets then. So notice that this portion here is inefficiently filled, meaning there's not selling within here. Now we can get 1, 2, 3, 4, 5, 6, 7 candles basically printing inside the range. So it doesn't need to have a down closing candle within it. But best case scenario, we have a down closing basically all the way in this upper portion and then expands back up. Low probability order block in here. I'm more concerned with actually this up closing candle range to hold price up. Obviously, if you wanted to do your fib projections, then it'd be on that range there. So swing high to swing low, last manipulation leg, -2, -2.5 is up here. And we're all also at 10:09. So if we're still truly bullish, then you see an expansion for another good 30 minutes or so. Okay, so now we have a short-term low there. This should be left as an intermediate term low. And this should be a long-term low, at least on the 1-minute time frame. I'm going to add this to it. So best case scenario, we dig up into the -2 to -2.5 around 10:30. We form a new swing high for the session. ES did pierce the daily buy side. $19,925. So there, now we got a down closing candle kind of in that range, not really. Extend this slightly, but we're now starting to close past it, so I'm not too concerned. We should see expansion. We have some wicks in here, but there's not really a lot of inefficient price action, so we could get a little bit of a slowdown in here, but then I like to see just speed really. As long as we can, if we can close above this short-term high, then you should see speed. So in predictions chat, I mentioned best case scenario on NQ, we dig up into -2 to -2.5 around 10:30, where we form a new swing high for the session. ES did pierce the daily buy side, which is potentially higher time frame SMT, which I'm going to show you exactly what I'm talking about. If I go to the daily chart, which I'll go to 4 hour. So these swing highs, and actually this swing high is pierced on ES. So, we have a potential SMT in there. I would still expect NASDAQ to continue up, and even this is too much buy side to not be taken. So I do think we'll still reach under there, best case scenario. But as long as we don't have lower time frame confirmation, CISD, in other words, I'm still comfortable with NASDAQ reaching up into 19,925, which would be up here. So we're holding this inversion quite well. Notice now we have basically down closing candles all within that entire fair value gap. Came up into here. Let me extend this out. Down closing candle in there. Extend this out. Down closing candle into there. So now this gap is efficiently delivered. So I would not want to see it really pass through it. But I also want to see kind of a propulsion through this range as we reach up for the 931 swing high. We didn't really have a deep retracement in here, so we could drop into maybe a version gap down here or something, but for the most part, bullish price action is holding the 1 minute. There you go. Hey, Flux, since tomorrow's FOMC morning session, gonna not be that good. I would assume so. I'm not gonna stream tomorrow. I probably won't even pull up the charts tomorrow, to be honest. So yeah, if you're gonna avoid one day of the week, tomorrow morning session would be a good idea. We do have 8:30 news on Thursday. I think we may have news on Friday as well. No, not really. We have FOMC member Harker speaks, which is not really super important. So yeah, best days this week for the morning session is going to be Tuesday and Thursday. Wednesday, especially with, I normally don't watch the news, but even just going to the gym, they've got the FOMC rate hike expectations up on the TVs there. So this one, for some reason, is being more talked about than normal. So you could expect even more manipulation tomorrow, meaning that even it decreased the probability of the morning session before FOMC even higher, I would assume. So yeah, it's not going to be something that I'm going to even be looking at most likely at all. Not most likely, for sure. I'm not going to be looking at it tomorrow. So I would suggest if you have a model that's strict to the New York session, which it should be time-based, then you don't even tape read tomorrow. Because whilst normally I would say, yeah, if you're not trading on a specific day, you could get some benefit out of tape reading, but tomorrow, especially if you're lacking in discipline and patience, it'd be a good opportunity to start to build that, right? We're not going to miss any crazy move. Most likely price action is going to be really, really choppy, disrespecting PD raise back and forth, seek and destroy kind of profile. That doesn't mean, though, that if there is a potential setup, say you come to the charts at 6 p.m. tomorrow and you look, okay, I still want to get my screenshots in, and there was a clean setup. That doesn't mean that you then adjust your rules. It's just kind of part of it. And you have to accept that on the days that you may not be trading, there may be a setup there. And that's not like kind of like a down on, you can't really get down about that because, oh, I missed my model or I missed a setup. You may think that in the beginning, but if it's not in a time window or a day of week that you shouldn't be looking, it's not a missed setup. Just like how in London session, if there's an ATM model in the London session, that's not, I'm not going to come to the charts at 9:30 and be like, oh, I missed that move. You just kind of siphon it out, right? You don't even think about it. Same thing with FOMC, same thing with NFP. If you don't trade the Thursday before NFP, treat that the same way, right? It's kind of a day that's just void. Treat that like the London session for Friday. So if there was a setup on that Thursday and you see people posting about it, man, I can't speak. See people posting wins or payouts from that NFP Thursday, you don't compare yourself to them because that's not your model or that's not the day you trade, right? Just like how if someone else is trading a different model and they get a win on the 8:30 news driver coming in, that's completely different than maybe what you trade. So you're not going to compare what their outcome was to maybe you not taking a trade. We're still kind of filling this inversion gap back and forth. That's why I'm rambling on. Stalling, probably waiting for time of day, I would assume. Got a 5-minute bisi there holding, actually. It's good to see you with the 5-minute CISD there. Yeah, inefficiency, order block, high quality. Hey Flux, what is the general rule for the fibs standard deviation to take the range from the CISD point to the low? It's normally the last manipulation leg. So if we're manipulating up, like in here, this is the last manipulation leg before the move down, I would take my fib from there. Okay. Obviously that's counter bias, so we're not going to get really a clean move out of that. This would be the last. There's a short-term swing high, if you can see it. But this high is higher than this one and higher than this one, so that's a short-term swing high. And then down into that low that was formed inside the internal range gap, I'm going to fib project that last manipulation leg up. Now, if you're doing something with the 5-minute, then it would be this entire leg. I normally like to just use the 1-minute just for the session because I'm not going to really be trading past 11 p.m. But yeah, so if you think about it like conceptually, visually, it would be basically that last, if there's a breaker, it's going to be that last leg here. And then same thing on here would be something like this. Okay, and you're looking for, each of these have importance. Like technically, yeah, if you want to swing grade, then that's going to be important. Each of these levels, you can find low risk, first stage, second stage, silver bullet, reversal, terminus, all that kind of stuff. I don't really use swing grading like that. But yeah, if you wanted to learn more about that, Fees got some videos on that. Dexter's Lab. Those are like the true. Dexter's Lab and Fees are like the market maker kings, in my opinion. If you want to learn anything market maker, model dynamics, learn from those two. What up, Exotic? It's been a minute. How you doing? Just chilling. Still waiting for that swing high to be taken. Check on ES. So ES is still climbing. Told you we got to be careful of that higher time frame SMT with NASDAQ and ES taking out the daily buy side. So as long as we still get lower time frame confirmation, I'm fine with it. I just want to see. Let me mark this 5-minute bisi out. And on the 15-minute, we obviously didn't get that ERL met. Really going from internal to external. Still holding the 5-minute gap and the 5-minute CISD. It looks like we're probably just going to wait on time of day to form the new high. Potential turtle soup on the lows. I do want to see it. If this is a soup, we should just leave the wick here, expand up, short-term change in state delivery above that green candle, blue candle, and then expansion. But yeah, we're kind of just stalling within this inversion gap. We've now completely filled it. I mean, if you want to take this entire range, even from here, inefficient portion, inefficient portion. This is all delivered with buying and selling. Oh, Exotic said it's soup. Then we got a good one. The SMT will hold. Oh, I need to look at the SMT. Oh, yeah. We'll have to see. It's definitely taking way longer than expected. Let me send this out again. So this is completely filled. I wouldn't even use this, like, extend it out past that. And keep that there. So this would be our propulsion block we mentioned from earlier. I mean, for 8:30 news, this is quite difficult. So don't think that this is a normal, easy day. I would say this is for 8:30 news. It's a little bit more difficult, even given the profile we're looking for today. A New York session reversal into continuation. That's difficult to look for. What's this? 19,863. Still got SMT on that one. So, I mean, it still could be turtle soup. Now we just need to see a change in state delivery above here. 1 minute CISD. And then we should expand after that. I'll screenshot this one last time. Until the daily, until the buy side is hit. That would be momentum SMT, by the way. So the daily or the higher time frame directional SMT is going to form at the swing highs and swing lows that you want to see reverse off of. This kind of internal SMT here is momentum SMT, meaning we should get momentum afterwards. It's also internal range turtle soup, and it's also just one of those kind of, if we're reversing in here, every single layer of the market maker model. So this would be directional. Each of these would have their own SMT, and normally that's when you have your impulse legs. So impulse leg, impulse leg, impulse leg right after the SMT and the turtle soup. So we didn't really have SMT down here, but impulse leg probably had some SMT in here. If you think about it, if the banks are now accumulating short-term stops underneath this, they don't want to give a lot of time where then people can pull their orders from above this swing high, above this swing high. They want to send it there quickly. At least that's what goes on in my mind. Did have the 1 minute change in state delivery here. I mean, if you want to extend that out, that'd be a reclaimed inversion fair value gap. Or reclaimed sibi, whatever you want to call it. But I mean, still inversion gap over there. To get the 1 minute change in state. Some wicks in here. You got a wick there, and then there. But not a lot of inefficient price to delivery. Like there's no large sibi that we're trading into. And look at what time we're approaching to, 10:30. So now trading into the down closing candle range, inefficiency there, inefficiency there. Oh, never mind, it did soup. Hey, where's Noah been at? I haven't seen him in a while. Ah. Probably back in jail. So if we rally up there, same thing in there. uh, 931. So as time goes on, as the session goes on, what you should be doing is, if you're consistently taking screenshots throughout the day, what you want to be doing is you want to be using all the tools that you would normally use in your screenshots after the fact during your tape reading. So marking up PD arrays, marking out, exactly what time frame those PD arrays are forming on, 5-minute bisis, 15-minute. Maybe the turtle soup is going to be something that you use. Maybe the fib projection is something you use. All that stuff is going to be important, because then when you go back in, you actually mark up what you're supposed to be marking up. It's way easier to probably see it in real time. So like on this higher time frame, I'm going to keep basically this internal range gap, previous week high, and then the buy side. Like when I go back in and screenshot it after the fact, I'm going to try and leave everything on that I think was, I'm going to delete everything, but it'll be basically the same things I'm marking out normally anyways. Still hovering around this inversion gap. I don't know how many times we've closed through it. It's about 10:30 as well. What's DXY doing? But he starts to, oh, okay. Need this to sell off just a little bit. Come on. No high quality order block in there either. That stuff. Still got all this sell side. You can kind of see the market maker model forming. But we need this to dip off. Very lethargic. Got all these relative equal highs too. I'm still weary about that SMT on the higher time frame. Now we have SMT up here too. So I'll be watching this. Obviously, if we don't hold these PD arrays, then probably will sell off again back into potentially the order block. But we have the soup there. The fact that we're not expanding away and we're still holding this kind of PD array here. Very, very sloppy. I mean, look how much we've been consolidating really in here, which I guess is expected for an 8:30 news day. You look for at least half of the silver bullet hour to consolidate. So I want to see expansion now within London close. So yeah, London close, 10:30 to 11. Technically 10:30 to 12, but yeah, Slander been learning 2022 model. No problem. I'll catch you later. I got you. Still got all this. So I mentioned this on the backtesting stream from Saturday, Q&A/backtesting stream. That next video is going to be basically how to lose properly. It'll be like a presentation kind of video, like you saw with how to treat trading like a business. I think it's gonna be probably super important for a lot of people, like how to really lose and how to take learning lessons and how to self-talk, how to program your own subconscious. All that stuff is important in trading, but it's not really talked about. They just tell, yeah, don't be emotionless and see how that goes for you. But 9 times out of 10, it's not going to work. So what you got to do is you got to reprogram the way you think, reprogram the way you think about losses, how you react after the losses. And then once you do that, basically, you want to start learning from your mistakes. So if you never learn from your mistakes and you keep making the same ones over and over again, then it's extremely difficult to get any progress in trading. You may be passing evals, you may be getting funded, things like that, but you're not really progressing if you're not improving. So that'll be something that I touch on. I think probably by the end of this week, I'll have it uploaded. So I came down and filled this entirely. I mean, we don't have sibis forming in here, so it's not terrible. Like this just still looks like retracement leg. This looks like a retracement leg. I mean, it's just not optimal. So boring. I know this will drain your mental capital. If you have to sit through a long consolidation day, like I don't trade the PM session, but I would like if you were to trade the AM session and the PM session or AM session and whatever. This is the kind of day where like you would have no mental capital throughout the day. Throughout the rest of the day. We have a 15-minute gap now or something. No, we don't. I don't even know. We got triple tops on the yes. Not really SMT anymore. Oh, I guess we had. No. So tapping to the order block. Is it past 50% now? Just barely touched it. But even this, I don't like it. Dropping too far into discount here. Also trading through the 5-minute bisi. And it's a new time, 10:30. And we still have not formed the new high. I mean, like trying to argue still for buy side. We don't have any inefficiencies in here. Tiny volume imbalance there, but it's just, notice how we're kind of wicking back and forth, making sure there's no sibis in here. So if there was to be buy side delivery, we can kind of displace through this quickly. But I mean, it's just not nice. Maybe short-term discount in here. Yeah. Got a 2-minute gap in a short-term discount. And this triple top would be kind of weird if we left that. Go to the daily buy side though. Did pierce this. Like I said, we got to watch for that higher time frame SMT. And then if you go to NQ, it's basically this swing high all the way up here. So I mean, maybe going to election, and it's still 2 months out. I'm still kind of watching this relative equal lows. We took it out by a tick. So I mean, I guess technically that's fine, but that's way too smooth. Not really a soup, just kind of a sell side sweep. I guess it is a soup, but there's no SMT there. So touch the order block. We didn't trade below 50%. I'm gonna extend this out to the right. Do you want to take the entire wick to wick? We did. If you take just the candle body to candle body, we did. So I mean, it's not best. It's not perfect delivery, but we're still holding this inefficiency there. We didn't take out the intermediate term low, which is nice. It's a lot of smooth highs up here. Relative equal highs. Another relative equal high up here. A lot of buy side. So my guess is, okay, they're priming all of this, consistently sweeping sell side over and over, dropping to discount. Retail sees that as shorting opportunities. But this is just a soup. And then we expand up to the resting buy limits. So this kind of down closing candle, filling a gap, expanding up, down closing candles, filling a gap, expanding up. This would be your another 1 minute CISD. Hopefully this one can hold now since we're in the time window. My gosh, is this long? Now we have a 1 minute gap here too. I prefer 50% of that is left open as a breakaway gap potentially. Got the 1 minute change in state. This is what I was talking about. So notice how this entire leg down into the inefficiency or into the total soup, whatever you want to call it. This entire leg has no sibis. Right, we're kind of opening, doing its work. Same thing here, filling that gap that would have formed. Same thing in here, opening, filling the gap that would have formed, filling, same thing. Then, as a result, as we reach into discount or as we reach the target, we can get speed because there's no inefficiencies. There's no speed bumps in price on this leg that we have to slow down for or kind of retrace. We can get accelerated move. That's why I mean above. Once you see closure really above like any swing high above here, I would like to see the same thing. There's not a lot of speed bumps. Wicks are inefficient, so wicks can sometimes serve as speed bumps. But I mean, it's not a whole lot. I'd actually see that as liquidity rather than something like a rejection block where it's going to hold price down. Not this. Actually, this is the reason probably why we were retracing. Come to think about it. Notice how we just had buying all the way through here. This actually makes sense. I don't know how I didn't see this before. But yeah, now we have buying and selling all the way through it. Same thing with the 5 minute sibi. Actually, okay, so it makes sense why we were retracing. Same thing in there. So, I mean, best case scenario, we still reach up in the -2 before 11 o'clock. I don't know how much juice we still got left in this. So I prefer if this is a breakaway gap. You can see the 5-minute down closing candle there too. Close above that, should be a bullish order block, especially if you can get some speed away from it. But like this point in here, get some speed above this. If we get a candle closure, so candle. Still kind of just waking back and forth within that inversion gap. If I extend this out again. So a short-term eye there. See if we can get some speed. If we get a closure above. Now, the reason there should be speed is because if we are bullish and we're consistently sweeping sell side, what the algorithm or banks, whatever you want to call it, does what I wouldn't want to see is give it opportunity for people to pull their orders from here where they cancel them out because they know it's going to be swept. You want to see speed where it's just aggressive, it's quick, so there's no time to get out. It's just it kind of just runs without them. Case in point. Make sense? So there's your short-term swing high. Take in with speed as expected, and you'd like to see 2 to 2.5. If I extend this out, let me just actually make this our target thing. Does that make sense, right? If you got a lot of buy side up here and you're trying to get out on that area, the last thing you want to do is give those guys opportunities to get out of their position. Right? You want them to, okay, that high is going to be taken. Then it slowly kind of comes up. No, I want it to pierce it. Boom, 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 quick. Right, so we're looking for potentially -2, -2.5 up here as a target. Standard deviation target. Nice, fatal. Yeah, I'm gonna post my my execution once that last limit order gets filled. But if you want to see it, still in it. So I can grab this. I'll post it in future trades if you want to see. Basically, still one runner long up until that -2. Nice, love it. I mean, approaching what, 1040-ish. Nice. But nice breakaway gap left open there too. Technically it's all of this, but breakaway gap. 1 minute CISD holding. This is the kind of price action. So like, look at this fractal in price here. I can't grab it. This is what I wanted to see in here. Down closing candle, filling the gap, speed above, fills it, and then leaves, right? Breakaway gap left open there, but we didn't really get that. So inefficiency there. Anyways, I'm really just risk-free, looking for continuation into that targeted area. Obviously, we do have the buy set up here, which we probably would reach going into lunch/PM session. I don't need to see it reach the draw for me to take off partials, though, which you shouldn't in the beginning. You should just be looking for small moves, 20 points, 5 points. Even if like you were to go long in here, right? That short-term high would be a low-hanging fruit objective. That's all you need. You don't need to wait through all of this. Like this kind of prolonged consolidation takes a lot of mental capital in the beginning to deal with. That's why I said like consolidation, if I were to trade in the PM session, which I don't, I wouldn't today because there's just a lot of, this burns it. You got to think of your mental capital as kind of like a chart. And as the day progresses, it just slowly declines. Okay. And this is time based. So maybe it's 60 minutes for you. Maybe it's 30 minutes. Maybe it's 90 minutes. Everyone kind of starts off with really, really low mental capital. And then as you continue to watch the charts, it increases the amount of time it takes to reach zero. Now, as you trade, every single time you place an entry, it decreases. Every single time you hit to take profit, it decreases. Every single time it hits a stop loss, it decreases. So every single time you enter a trade or you hit take profit or you hit stop loss, that will substantially decrease. Basically, it'll create these jumps in your mental capital, where then as you hit zero, this is where you make irrational decisions. I can't write with this. But you make irrational decisions. That's where you over leverage, over trade. This is where you break your rules. This is like the no-go zone, right? So you don't want to be trading with negative mental capital because then that's where you make mistakes. You want to operate in a positive mindset. Now, also, given that, some days, if you have expectations or you're in a losing streak or something has gone on in your personal life where you can't think with a logical mind, you think with an emotional mind, you may start off with 25% of your mental capital. You may start off with 50% of your mental capital. And sometimes what you'll do is here is as soon as you hit your stop loss, maybe you can comfortably taper it. It's a really clean day. But then you enter a trade, it decreases and we're slowly decreasing. Then you hit stop loss and you're automatically in the negative. And that's kind of where you make irrational decisions as well. So normally in the beginning, what you want to do is just keep a one trade per day mentality, one shot, one kill per day. That's really all you need. And it'll make you realize the importance of losing properly. And it'll also force you to lose at least a couple times, because sometimes what happens is you take a loss, but then maybe you want to keep trading until you get a win, right? You want that dopamine hit. You want that green P&L, which is why I also try and push. You shouldn't have a day-to-day sort of profit goal. I don't think you should be reaching for in the beginning. If you want to have a weekly profit goal or a monthly profit goal, that's good. Or even just like a weekly, how many times per week do you want to reach, I don't know, 1 to 2 R. It shouldn't be a daily thing because that's going to force bad habits. Once you focus on building the good habits and building up, becoming a trader, right? What's the identity of the trader? Is he disciplined? Is he this? Is he this? Then the money starts flowing in separately. It's two different things. You focus on the money, it doesn't come to you. You focus on building good habits, the money will flow to you. You got to first become the person that attracts these kind of things. The law of attraction, whatever you want to call it. But you're not going to get anything in life if first you don't believe you can do it. And second of all, you don't become the person that deserves that kind of thing that you want to manifest. So we're filling this gap. We got a tiny gap in here with the low, high, lower low. Low, really low quality breaker, but so, I mean, new timed high at, what is this, 1047. So we don't need to see anything more. We are within the macro time again, 10:50 to 11:10. So retracement, maybe continuation back up into that standard deviation target, maybe even up to the buy side. But like I said, we don't need to see this. We don't need to see that tagged. We've already gotten what? 70 some points. So funny though that they teach you all these things in class and in school and in online, that supply and demand is how the markets function. But then when you come to ICT concepts, you're like, they are literally just priming us of liquidity. Like the stuff that they taught or that you learned about supply and demand is the most BS thing, and it's just for the banks to get even more liquidity out of you. And it's funny because, like, okay, if that's how it is in a market, if that's how the market operates, think about how the rest of your life kind of operates, right? They kind of just breed these people who are liquidity for them. They just they want you to do exactly what you're told and, not make a way for yourself. Become the mat in the maze, exactly. Rats in the maze. Yeah. Now, the order block that this inefficient range would be reaching into is technically this. I'd actually prefer the breaker in here. Like this entire down closing candle range, technically, would be the order block. Or the 1 minute CISD, whatever you want to call it. So depending on how we react to this inefficiency, I don't want to be really in it after that. There's your buy side on ES as well. Swept. Really, really low quality order block there. Tiny, tiny range. Now, I don't like the fact that if you look at ES, we're displacing here, taking a short-term low, displacing, taking a short-term low. So that to me makes it seem like we're going to reverse. And yeah, we're starting to fill this lower portion. So close up my runner there. Full execution I'll post. I mean, it could reach up on that standard deviation target after, but with how much time it took, I don't want to be burning mental capital on those kind of moves. So I'm going to delete the other picture. I'll post the fully executed one in future trades if you want to see that. But a nice little, I don't know, about like 73 points, and then like a runner for like 50. Although it was 8:30 news, I mean, it's still kind of a difficult day. The profile was basically what I was looking for on the 15-minute chart and the hourly chart. New York retracement into a expansion. So played out basically perfectly to the bias. Played with the bias, although it's a little bit of a more difficult entry with the tiny breaker there within macro time and as a macro reversal. That's just kind of stuff you have to be comfortable and not looking at this as a shorting opportunity, not looking at this as a shorting opportunity, but rather as future inversion gaps. And obviously I'll be marking this up later in the day, screenshotting everything that's important, but I hope you took something out of the stream, either to be patient or how to tape read or anything like that. If you got any questions, shoot me a DM, or if you want to schedule a one-on-one, I got some DMs, right? Got to respond to that today. Yeah, I'll try and post a stream recording as well. I may chop this one up and put it into short form for the YouTube, depending on how much time I have today. Just because I think it's a good day to learn from, regardless. So, anyways, no stream tomorrow. I would suggest if you have a AM session based model and if you want to practice patience and discipline, don't even open the charts tomorrow. You can tape read. It's an opportunity, but I'm 100% not going to be trading tomorrow, and 90% confident I'm not even going to open the charts until after the day is done. So I'd be really, really careful tomorrow if you are going to look at it. But like I said, it's better to just practice discipline and patience and continue to flex that muscle, the discipline muscle, and grow that rather than, try and force something that's not there. And that comes with the responsibility of, if there was a setup in the morning session tomorrow, you're not going to beat yourself up over it. I'm actually really, really glad I took my runner off. That's kind of displacement down, but that's what I was talking about. So yeah, we displaced, do that short-term low. We're displacing, we're forming sibis, right? We didn't have sibis in here. This is a retracement like displacement, short-term low. That's your 2022 model. Anyways, not trying to bore you more, but now we're retracing further in that you wouldn't want to see for a runner, or we barely missed -2, but it is what it is. Anyways, so take care of the rest of your day. Do the things that are necessary to succeed. Journal, screenshot, whatever it takes for you. And I will catch you guys, Lord willing, on Thursday for right at 9:30. We'll start the stream, and then potentially on Friday as well. But 100%, okay, 100% Thursday and Saturday. So take care, and I'll talk to you guys soon. Peace.